heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we push ahead to Apple's results after the bell as investors anxiously await iPhone sales numbers.
Plus, we'll sit down with the CEO of Qualcomm as the chipmaker offers an upbeat forecast.
And the CFO of DoorDash joins us to run through the company's latest results, all that and so much more coming up. There is a wealth of micro data of company news today that we're going to be digging into, not to mention New York-based Peloton, but I'm looking at what's happening on a broader index today, Ed. We're seeing the Nasdaq up 0.7%. Post the Fed, we're relieved that we're not going to see rate hikes coming, but certainly still no signal of those rate cuts as we still see a resilient U.S. overall jobs picture, which we get the detail of come Friday. Yes, there's a cooling, maybe the slowest increase in jobs since November, but still resilient. We're seeing a 10-year yield just down 1 basis point, a little bit of movement into the bond market on the day post-Fed as we anticipate the jobs data, and Bloomberg dollar index actually weaker as we see a little bit of a relief there. We're down by 0.4%. What therefore is Bitcoin doing versus the US dollar? Let's move it on and have a little look that we're up 3%. So a little bit of a risk on kind of a trade today, but still sub that $60,000 level. But Ed, what are you watching on this corporate news front?
Let's start with Peloton, an absolutely wild morning session in the market so far. CEO Barry McCarthy is going to step down. The board will find a new CEO. 15% of global headcount going to be cut. The story overall, things are not getting better for Peloton. Look at the chart, two-day chart to illustrate the point that when the market opened, there was a session high of 18%, cheering what is another restructuring, and yet we're now down more than 10%. Having had some time to basically look at what Peloton's saying, and on the hardware side of their business, the multi-channel sales side of their business, and then subscriptions, things are not going to be as good by the end of the year as perhaps they had hoped, the market had hoped. We're going to get deep on that later in the show with Bloomberg's Mark Gurman, but that is just a real ride, that stock this morning. The earnings story is elsewhere as well. Qualcomm up almost 10%. The smartphone market seems to be recovering. There's going to be a lot to talk about with CEO Cristiano Amon later in the program in the context of AI and also what's happening in China. And then DoorDash. This is a tale as old as not time, but the history of gig economy companies. Investors looking at EBITDA forecast and wondering what's going on. The relationship between app-based gig platforms and EBITDA is something we've talked about a lot. The concern is, are they investing too much? What's going on with the bottom line? It's the US's biggest delivery platform. Mid-single-digit growth, teen growth in the second quarter. Let's find out what's going on with that one, Caroline.
Yeah, because we did actually see strong numbers for fiscal first quarter, revenue on the higher side, but it was this worry about the forecast that is sending the shares lower. DoorDash CFO, the perfect person to speak to about it. Ravi Inakonda, thank you very much indeed for joining us, Ravi. And just talk to us about why this restrained outlook for adjusted EBITDA come the second quarter, and why then the ramp in the second half.
Good morning, Caroline. Thanks for having me this morning. Q1 was a very strong quarter for us across the board. If you look at the results, demand on the platform continues to be very strong. All-time highs in terms of users, all-time high in terms of subscribers, all-time high in terms of order frequency. In Q1, we fulfilled more orders than ever before in our history. Honestly, it's been one of the strongest quarters since I've been here for the last 6 years. When I look at the underlying demand on the platform, it really is very good. We are not seeing weakness on the consumer side, whether it's low income or high income or the East Coast or the West Coast. We're seeing strength across all markets. We operate in 30 countries across all lines of business. And at the same time, we posted the lowest net loss in our history, which is being aided by the highest adjusted EBITDA in our history. Overall, the business continues to do really well, and I'm excited about not just the Q1 results, but the going forward Q2 as well as the rest of 24.
So do you get frustrated when the shares fall because the market wanted to see more in terms of profitability for the forecast?
Our goal has always been to continue to build the best product possible, and you're seeing that in our results. Users, like I said, have been at an all-time high. We ended 23 with over 37 million consumers, and that number continues to grow considerably since that point. We're not seeing any weakness, whether it's the large enterprise merchants on the platform or the local merchants on the platform. We're seeing strong double digits, same-store sales growth across the board. Our grocery business is growing at 100% year-on-year for the third straight quarter in a row. Our goal will continue to be to build the best product possible that can serve all three sides of the audience, whether it's consumers, merchants, or dashers.
Ravi, on building the best product possible, if you zero in on the adjusted EBITDA forecast, there's some sense that you're investing in specific areas, and that might be impacting the bottom line, right? You're investing at the technology layer. What are you doing, and what's the goal there?
Yeah, in Q1, one of the key things that impacted the overall business is we did absorb some costs in New York as well as Seattle. That cost is going to continue to reduce as we go through the rest of the year, as we make the business more efficient, as we consider other opportunities to make those costs go down. If you recall our business, the core restaurants business has actually been profitable for many years now. We're taking the profits from that business and building two new businesses, grocery as well as international, both of which are growing extremely fast. They're growing faster than our restaurants business. At the same time, the profitability of both of those businesses is going up. If you look at our new verticals business, the third-party component of it has been gross profit positive for a few quarters now. Same is the case with international, where many countries, the restaurant business is actually contribution margin positive. So overall, the restaurant business profitability is improving. Right. Our new verticals as well as international is also improving in profitability.
Just really quick, you mentioned Seattle and New York. Those are kind of idiosyncratic factors in the quarter. Just explain the basics to our audience of what happened there on the policy front.
Yeah, on the policy front, look, our goal is always to work with policymakers and regulators. We do that in over hundreds of cities across 30 different countries to ensure we are protecting the flexibility and accessibility that dashers and couriers across the globe are asking for.
Yeah.
York and Seattle are honestly like extreme examples of that regulation. We've taken some action to change the way in which we operate. We're making the business more efficient. And our goal is to continue to work with policymakers in that regard.
Let's just get details on operating profits. You say they'll come in the near future. The market expects the third quarter. Are they right to expect that?
Look, I mean, our GAAP net loss is the lowest in our history. What you're seeing in the business is the growth is strong. Profitability across all lines of business is improving. I do expect the trend to continue. And if that trend continues on both the growth as well as the profitability, the overall business is going to be GAAP positive. It's just a question of time. Our free cash flow has been very strong. If you look at the quarter, we've generated roughly about $500 million of free cash flow. And that's truly our North Star in being able to maximize cash flow in the business.
Ravi, real quick, what are the specific consumer habits, the size of the basket that they're doing? Lots of frequency, little spend, like little things like that?
Sure. What we're seeing in the business today is more consumers ordering from more categories. Historically, people thought of us purely as a restaurant delivery platform. Today, our consumers, roughly about 20% of our consumers, are ordering from convenience, grocery, alcohol. We've increased the basket sizes across...
Ravi, DoorDash CFO Ravi Anaconda, we've got to go. Thank you, Karen.
Yeah, if we have some breaking news, let's go to President Biden delivering remarks right now.
The first is the right to free speech and for people to peacefully assemble and make their voices heard. The second is the rule of law. Both must be upheld. We are not an authoritarian nation where we silence people or squash dissent. The American people are heard. In fact, peaceful protest is in the best tradition of how Americans respond to consequential issues. But neither are we a lawless country. We are a civil society, and order must prevail. Throughout our history, we've often faced moments like this because we are a big, diverse, free-thinking, and freedom-loving nation. In moments like this, there are always those who rush in to score political points. But this isn't a moment for politics. It's a moment for clarity. So let me be clear. Peaceful protest in America. Violent protest is not protected. Peaceful protest is. It's against the law when violence occurs. Destroying property is not a peaceful protest. It's against the law. Vandalism, trespassing, breaking windows, shutting down campuses, forcing the cancellation of classes and graduations. None of this is a peaceful protest. Threatening people, intimidating people, instilling fear in people is not peaceful protest. It's against the law. Dissent is essential to democracy, but dissent must never lead to disorder or to denying the rights of others so students can finish the semester and their college education. Look, it's basically a matter of fairness. It's a matter of what's right. There's the right to protest, but not the right to cause chaos. People have the right to get an education, the right to get a degree, the right to walk across the campus safely without fear of being attacked. But let's be clear about this as well. There should be no place on any campus, no place in America for anti-Semitism or threats of violence against Jewish students. There is no place for hate speech or violence of any kind, whether it's anti-Semitism, Islamophobia, or discrimination against Arab Americans or Palestinian Americans. It's simply wrong. There's no place for racism in America. It's all wrong. It's un-American. I understand people have strong feelings and deep convictions. In America, we respect the right and protect the right for them to express that. But it doesn't mean anything goes. It needs to be done without violence, without destruction, without hate, and within the law. You know, make no mistake, as president, I will always defend free speech, and I will always be just as strong in standing up for the rule of law. That's my responsibility to you, the American people, and my obligation to the Constitution. Thank you very much.
Mr. President, have the protests forced you to reconsider any of the policies with regard to the region?
No. Thank you.
Mr. President, do you think the National Guard should intervene?
No.
Mr. President, do you agree with what the students are calling for?
Mr. President,
President Biden delivering remarks at the White House regarding protests, student protests. Let's bring in Bloomberg's Kayleigh Lines for more. And against violence and destruction, but, well, for peaceful protest.
Yeah, the president making it clear that he does stand by Americans' right to free speech and that should not be interfered with. But yes, Caroline, essentially that it should be done peacefully. The president, in making these remarks in the Roosevelt Room, said dissent must never lead to disorder or denial of rights, that the right to protest does not mean the right to cause chaos, going on to say that there is no place for anti-Semitism in America. He makes these remarks as he is facing growing pressure to address what we're seeing happening on college campuses across the country, from Columbia University to the West Coast, with what we've seen at UCLA in the wee hours this morning. All of it just speaking to the pressure that he is under as he is trying to stand by Israel as an ally, but there is growing concern about the way Israel is conducting itself in its war against Hamas in Gaza. We just heard there the president being asked by a reporter whether or not this has all made him rethink his policy on Israel. He said no. He also said no to the question he was asked about whether the National Guard should be interfering in these instances on the college campuses. He said no to that as well. I would also point out we will be hearing from President Biden on the issue of anti-Semitism again next week. On Tuesday, May 7th, he is planning to speak at the Capitol as part of the National Holocaust Remembrance address ceremony that will be happening on that date. We heard from the White House Press Secretary Karine Jean-Pierre yesterday, who said the president will discuss the moral duty to combat the rising scourge of anti-Semitism and the administration's work on that issue. Of course, we probably got a preview of some of what he will likely say when we just heard him speak today.
Bloomberg's Kayleigh Lines, thank you for the context on that. It's interesting because we've been talking about protests at different university campuses across the country and indeed across the world for several days at least now. What was the politics of this with the president? What was the pressure on the Hill and the conversation about whether or not Biden would come out and say anything and the timing of it?
Well, we had heard President Biden speak on this before, saying that he condemns anti-Semitism, although he also had suggested that people need to understand what's going on with the Palestinian people. But certainly the domestic political pressure has been growing. We have seen specifically Republican members of Congress really taking hold of this issue. We have seen the House Speaker, Mike Johnson, together with other Republican members of the New York delegation, actually going to the campus of Columbia University just last week. And just last night, the House passed by a wide wide bipartisan margin a bill that would essentially help the definition of anti-Semitism be applied differently with the Department of Education. There was some concern that that would become a free speech issue, that it would limit criticism of Israel or the Israeli government, for example, but it still got through with a bipartisan majority. It's unclear whether or not that will move forward in the Senate, but you are definitely seeing through the legislature efforts to combat anti-Semitism. A lot of blame being cast on President Biden, whether rightly or not, for what we're seeing on college campuses. And of course, he's been dealing with the political ramifications of his wider policy toward Israel consistently throughout this primary season, as we have seen actual Democratic primary voters voting against alternatives, whether it be uncommitted or something to the effect in different states like Michigan and others, to express their discontent with how the president has been handling his Israeli policy.
Talking of Israeli policy, breaking news that Turkey has indeed halted all trade with Israel. That's both exports and imports to and from Israel as of Thursday. That's according to two Turkish officials familiar with the matter. Katie Lyons bringing us the latest from what the president has been saying. Meanwhile, we want to return our attention to what is in an investor's focus right now. We are still amid earnings season. Today is Apple reporting quarterly results after the market closes later today, giving investors kind of a better sense of how the iPhone maker is weathering its sales slump. We've also, though, got to be talking about what on earth is happening over at Peloton. Its shares slumped too. Bloomberg's Mark Gurman for more on what to expect. Let's just kick off with Apple, because it is the huge company that many focus on. What are we lining up for?
Yeah, Apple earnings. The expectation for the fifth time in 6 quarters, Apple's going to report an annual decline. Revenue is expected by Wall Street to come in at about $90 billion in change, which would be about a $5 billion dip on year over year. The other thing that's not so hot here, all of Apple's product categories, so hardware categories, from the iPhone to the iPad, the Mac, wearables, AirPods, those are expected to decline on an annual basis, with the only bright spot potentially being actually some pretty significant growth in the services business. Also another decline in Greater China, right, on the heels of reports from Counterpoint and IDC and others that iPhone sales in China dipped by about a fifth, despite the smartphone market going up in general. So overall, $90 billion in revenue, that's a big number. That's amazing for most companies. But for Apple, Wall Street probably would have liked a little bit more.
Mark, hardware and services is a pretty wild story when it comes to Peloton. Bloomberg Technology team, let's show the 2-day chart and just go back over what happened. Opened up as high as 18%, is now down more than 10% in the session. The CEO's going after 2 years, another headcount reduction, and I think no sign really that Peloton's got a strategy to get itself out of trouble. Give me the details.
I don't think people realize how close Peloton is to bankruptcy, right? They'll be lucky to remain on the stock market much longer, if you ask me. I'm shocked that Barry McCarthy stuck around so long. There is nothing he didn't try. There is nothing he didn't do. He's laid off several thousand people. He's moved from a hardware focus to a content and subscription focus, restructured the company multiple times, hired new executives to right the ship, outsourced pretty much everything you could outsource, from installation to shipping to manufacturing. And here we are, missing Wall Street expectations, missing internal forecasts, people still not buying as many bikes and rows and different Peloton appliances as you would expect. The premium app falling flat on its face.
Yes.
People like their marketing chief continuing to leave. Peloton is in its worst shape as it's ever been. And they have no CEO running the company.
Just looking at the Bloomberg terminal, and just to give some specifics, the stock is at a record low. They ended the quarter with about $700 million, $737 million of cash. And they did say that because of the head count reduction, they'll save about $200 million a year, and cash flow positivity is possible by the fourth quarter. But as you outlined, Mark, the situation for Peloton, which is a company way off its pandemic era high, is pretty bleak. Bloomberg's Mark Gurman. Stay tuned for his reporting on Apple as well after the bell. Now coming up, chipmaker Qualcomm up with earnings and a strong forecast. There's a lot to talk about with CEO Cristiano Amon about the AI smartphone and the AI PC. That conversation is coming up. This is Bloomberg Technology.
Time now for Talking Tech. First up, video game publisher Take-Two Interactive plans to shut down 2 subsidiaries as part of a mass layoff across its divisions over in London and Seattle. That's according to documents reviewed by Bloomberg. Now, last month, Take-Two said it would lay off 5% of its staff. That's around 600 workers. Meanwhile, let's take a look at Starlink, as it's still operating in multiple unauthorized regions, even after the company issued warnings last month that its satellite internet will be shut down by May 1st in those areas. These notices come after a March investigation by Bloomberg News, which first revealed the extent to which Musk's satellites are being used in countries where it is illegal to operate, including in territories ruled by repressive regimes. And regulators moved to bar a Huawei lab from approving telecom gear for use in the United States. Now, it's a proposed similar moves now against other providers deemed a national security threat, including several Chinese companies. The FCC says this will ensure that these non-government labs aren't, quote, influenced by untrustworthy actors. Ed, we got more on Huawei.
This is another big Bloomberg story. Chinese telecommunications giant Huawei is secretly funding cutting-edge research at American universities, including Harvard, through an independent Washington-based foundation. Here with the scoop is Bloomberg's Kate O'Keefe. And Kate, at the heart of this reporting, like all good Bloomberg reporting, is you following the money. What did following the money tell you?
Right. Well, what we saw is that over the past few years, Huawei has funded hundreds of researchers and spent millions of dollars. And it was all really without their knowledge. They thought they were being funded by a foundation based in Washington, D.C. that is called the Optica Foundation.
Competition administered by Optica, and in fact grants, I think you say there are 11 opportunities on the Optica Foundation website to have early career prizes and fellowships, but all but the Huawei funded competition are basically clear about which backers are providing the money. What did ultimately the Optica Foundation save for its quietness on Huawei's money?
Right, exactly. So the other 10 opportunities all made clear that they were funded by an individual or a company or some combination. The Huawei-funded prize appeared to all the people that I spoke with to be funded by the foundation's general funds. And the response from Optica's CEO was that, look, there's a lot of donors who want to remain anonymous, including U.S. donors. And, effectively, there's no issue with it.
There is examples in other jurisdictions of Huawei being a bit more public, having initiatives to make inroads in those markets. I think particularly in Europe, Kate. Explain what you learned there.
Yeah, that's right. I mean, as we reported, in countries like France and Germany, Huawei is openly funding research centers. In the U.S., it's a really different story because several years ago, the U.S. government moved on multiple fronts to restrict Huawei. One of the major restrictions that have been in place are export controls, and that blocks people and companies from sharing tech with Huawei. But what's interesting about this competition is it actually kind of falls through the cracks of all these different regulations because it deals with academic research, which is for the most part meant to be published, and therefore it is not subject to the current export controls that we have in place in the U.S.
Nevertheless, and as a great quote in your piece says, it's a bad look for a prestigious research foundation to be anonymously accepting money from a Chinese company. So really, ultimately, this is about sort of the feel of it rather than actually the letter of the law.
Well, right. There's nothing illegal about this as far as I could tell in my reporting. It does, though, put the universities who actually accept the money on behalf of these researchers, as well as the researchers themselves, in an uncomfortable position because a lot of the universities have decided independently that they don't want to work with Huawei anymore. Some of them have made public statements about that. And so they're in this weird spot now where some of their researchers have gotten money already, but to do good work, to do science, but they didn't know who was ultimately funding it, and maybe something different would have happened had they known the true source of funding.
Kate O'Keefe, first great big deep dive for us here at Bloomberg. We so appreciate you joining the show. Thank you very much indeed.
Welcome to our Bloomberg television and radio audiences worldwide. Qualcomm stock significantly higher, around 10%. The story, things look like they're improving in the smartphone market globally. And within that, there's a lot of nuance. There is specific action in China, and there's strength also for the chips that go into cars in the automotive sector. Delighted to say that Qualcomm CEO, Cristiano Amon, joins us now. Good morning to you, Cristiano. And let's start with China. What you guys said is that sales to Chinese handset makers surged 40% in the first half. But I wonder what the story behind that is in the end market. What's happening, particularly with Android-based platforms for the Chinese consumer?
Very good. Good morning to you as well. It's a great morning, I think, today. But look, the story on handsets in China is pretty simple. We've seen the market had stabilized. We had said about that a couple quarters ago. And users are buying better phones. It's really, for us, a story of flagship and high tiers within the Android, especially a lot of those flagships that are launching with Gen AI. I think we see the very beginning of Gen AI coming to devices, and that actually drove, a lot of the growth. And it's 40% not only in this quarter, but actually expected to have the same in the next. As we look at the guide, it has been a good story as the smartphone market stabilizes and Android flagship has stayed resilient.
Cristiano, as you know and our audience knows, we will talk about on-device when it comes to generative AI. Let's just linger a moment longer on China. It looks like some of the domestic players that are Android-based are gaining market share against Apple and the iPhone. You see that in the IDC data. You see it in the Counterpoint research data. If that is the case, where the domestic players are gaining that market share, what does it mean for Qualcomm?
Look, the way you should think about our position in China in the handset market, we have been very focused on the premium and high tier with Snapdragon. So when an Android OEM from our customers, Xiaomi, Oppo, OnePlus, Honor, Vivo, when they're selling a flagship device, we have a lot of content. Not only we have the modem content, but we have a lot of the application processor, the AI engine. So that has been a positive development, and that's what is being driving the content increase and the ASP increase, especially when the mix changes to a premium device. The fact that the Android flagship in China with the Chinese OEMs had been stable, proven to be resilient, and see positive momentum as the mix get richer. Chinese users are buying a better phone. That's a good story for Qualcomm, and it's reflected in the numbers.
Is there any anxiety from a geopolitical perspective, Cristiano? You've obviously weathered the fact that you're only in Huawei 4G phones now. You're actually seeing basically ultimately revenue pull away by the end of this year for Huawei. But the geopolitical context is clear. How difficult is it to you to be so dependent on China?
Look, the first thing I want to say is our business is not just China. And I think what happened with the smartphone, this is a phenomenon globally. I think you even saw Samsung, when they talk about it in their earnings call, they have a commentary about the device AI opportunity for flagships is real. So the second part is the way we think about everything is if you have a leadership position in technology, you're going to have a big business in China. It's just a function of the size of the market. And I think that's being true not only for Qualcomm, for a lot of other companies that have leadership product position. And to this point, I think we have been seeing our business in China continue to be a stable business. We have not been restricted, but like everybody else in the industry, we have to monitor the situation. I think this is how we have to navigate in the semiconductor industry, but we're happy with the results we have right now.
Let's go therefore to the technology that is winning out. And you talk about AI on device. How are people using it? You've got a Snapdragon 8 Series Gen 3 mobile platform that's really meant to be supporting generative AI at the moment, basically with a personal assistant potentially. But how is that a reality for any or many?
Look, I love talking about this, and I wish I had a lot of time. So I'm going to try to summarize it in just a few minutes. The first thing that is happening, you need to think about AI running on the cloud and the device as a new way of doing computing. And we're just at the very beginning of the use cases. So right now, we can see, for example, multiple tens of use cases. And I expect that within 6 months from now will be hundreds, if not more. What are people doing with it? You see some use cases of live translate. You can watch a video. You can add a subtitle in any language you want. You can do a lot of real-time photo editing. You can change a lot of the images with the way you like it. You can create new images. You can summarize documents. But the most important thing is the other thing that it's going to bring to phones. I'm going to give you a point to an example. More and more, you do more things on the phone today. But there are things that you're going to think about it. You know what? I have to respond to this very long email. I'd rather wait until I get to my laptop. When you think about a Microsoft Copilot in the phone, for example, you're going to see a lot more use of those devices. We're going to see much more productivity. So we're at the beginning of something great. It's going to take some time. Use cases are developing. You should think about this, what happened with the smartphone. In the beginning, there's just a few apps in the App Store. But then, all of a sudden, the apps started to define the user experience. That's how we feel about AI. We're at the beginning. It's going to take a little bit of time, but the signs are great.
For our Bloomberg television and radio audiences worldwide, we're speaking to the Qualcomm CEO, Cristiano Amon, and I think you summed it up well, Cristiano. We're in the very early stages of a world where we're running 10 billion parameter models locally on device on the smartphone side. But we're already talking about the AI PC, right? You guys have your latest generation, which will come to market, Snapdragon 10 Elite and Plus. And it's very impressive. Combination of CPU, GPU, NPU. Give me a minute, we'll talk about NPU. But I still think a lot of people struggle to say, what am I going to do sitting in a cafe running a $10 billion parameter model while I have a cappuccino? Like, what's the actual real world use case?
Okay. We could not be more excited about what's happened in PC. I really think PC is reborn with the Snapdragon X Elite. And it's not only because of the performance, but because actually AI. By the way, we can run 20 billion parameter on the X Elite. It's evolving very, very fast. But the use cases are really incredible. Think about now this AI running all the time. Everything you're doing on your PC, it is running, and it's private. It's your data, it's your use. The AI is learning about you. It's trying to understand your intent. And we starting to see right now with the Microsoft Copilot that you can use the Copilot for everything, for PowerPoint, for Excel, for Word, for email. But there's much more. The AI is helping you recall documents that you have that you've seen or you have on your computer. It's going to help you do things, going to reminding of things that you have to do, or even it's going to help you with tasks that you need. You don't know how to do it, and they will help you one step at a way. That's going to change how we use our computers. And the interesting thing is, how do you do this in a way that you don't compromise battery life? A CPU and a GPU have a job to do. And that's why when you buy a PC today, you want a fast CPU and a fast GPU. But you need a whole new engine that needs to do something else. It needs to do it all the time and not compromise battery life. That's the Qualcomm story.
And what is the market share story of Qualcomm? We've been hearing a lot about other competitors getting into the AI PC space.
I think this is the great story for Qualcomm because we're new. We're just entering the market. I think we're going to see a lot of the devices coming up in the second half of this year. I encourage everybody to watch the Microsoft build and the incredible things they're doing with the new Windows. And I think what's going to happen is Qualcomm is coming in with the leadership product. We like the design traction. Financially, that's going to be more of a fiscal 25 event because a lot of the laptops are going to be in the shelves for the second half and back to school. But the product momentum is great. And here's how you should think about Qualcomm market share in general. one thing about the company, and it's been the history of the company, everything that we set ourselves to do, the track record is actually not bad. When we entered the Wi-Fi, we became number one. We entered the RF front end, we became number one. Automotive, we said we're going to go into automotive. I think our story there is very, very good. We're becoming the preferred partner of the industry. We said we're going to enter the metaverse. We have every single design. Now we're saying we're going to enter the PC. And we started off the gate with the leadership in the product. So, as we continue to execute, time is going to show that we can gain share and can be a significant player. After that, it's going to be industrial as we continue to execute on the growth and diversification of the company.
Friday Talk, Qualcomm CEO Cristiano Amon. We thank you for bringing the energy today.
Thank you. Great talking to both of you.
All right, let's get some news in the world of private markets and venture. Blood testing company Carius raised $100 million in a new funding round from investors led by existing investor Khosla Ventures alongside 5AM Ventures and Glide Healthcare. The company declined to give its valuation but says it will use the cash to get its technology for detecting hard-to-identify infections into more hospitals. Let's stick with all things private, venture and startups and bring in CRV General Partner Max Gauser on today's VC Spotlight. Producer extraordinaire Marguerite Gallerini has been crunching the numbers on IPO activity. You don't really need to crunch the numbers because we've been quite busy of late and we had a pocket in September. You're a firm that invests at the seed and Series A stage. What are the numbers that you crunch when activity is happening in the market?
Yeah, well, great to be back. Last time I was here in January, we mentioned that we counted over 100 companies that we felt were IPO ready. And I'm glad to report that that number is still holding strong. We've seen also some great activity in the public markets with Rubrik going out, its first software IPO of 24. We saw some strength with Astera Labs, which is an AI infrastructure hardware play. ARM held up post-lockup. These are all data points that would suggest that not only is the IPO market strong, but the M&A market is thawing as well. So with HashiCorp and IBM and talks of Informatica and Salesforce, we feel that the big thaw is here. We're very optimistic for 24 and into 25.
And the reason that we want to have you on the show, and I guess that you give yourselves a little pat on the back, is that you identify the names early that go on to be successful. Seems to me though, like even pre-seed, but seed and Series A is becoming a very competitive space in the context of AI.
Absolutely. Look, AI is one of those things that people are focused on. Every VC in the Valley is looking at AI. We think of it not just as an innovation from a technology point of view. There is a technology, step function in change there, but also from a business model point of view. So let me give you an example. Most software today is sold via license model. Whether you use it or not, you pay for the license and that's that. Or it's a seat-based model where it's per seat. What if that business model changes to a per consumption basis? So you pay for every task that the AI completes. If that holds, we're at the dawn of a new era in business software because it's a transformational shift in how software will be sold, and AI is enabling that. So we're not just looking at it from a technology point of view, but a business model innovation point of view. At the earliest stages, it's really hard to see that, so we're betting on founders that think in those big terms, and we've been doing that for 53 years.
Max, what's therefore the viewpoint when you bet on those founders of their exit right now? Because what we're seeing with AI startups is they're having these increasingly interesting partnerships with big legacy businesses that the likes of Dan Loeb are currently saying are actually going to be the winners of the artificial intelligence revolution. Do you think it's all about M&A when it comes to these AI bets?
Well, Caroline, it's a great question. If you look historically at the VC market, most of the exits have happened via M&A, right? There's a few giant winners and the power laws take effect with IPOs, but M&A is really important, which is why it's important for us and encouraging for us to see this big thaw that's happening. To your other question, right now, everyone's focusing on the Magnificent Seven and these big companies and the scale that they have because there's so few public AI companies, right? We think that there's hundreds to come in the next decade or so. And I think that the shift will focus away from those concentrated winners today to some of the startups that we're seeing in the market, the private markets that are coming behind that.
To, of course, keep on raising funds, to keep on allocating to the founders the very early. You've got to have this proof of track record, which you have. And I'm just interested as to if you've got any companies that you're thinking about to get out the gates, how are you bracing yourself for your own IPO pipeline?
It's a great question. A few things have to happen for an IPO to occur, and they happen often very far in advance. So one is often up-leveling of leadership teams, right? Functional roles in finance, in marketing, in sales, in product, et cetera. So we see that. We see cap table fortification with the introduction of crossover investors that are both private and public investors that come on.
NVIDIA is a big one doing that at the moment.
That's right. And you know, the other thing that we see, which is probably the strongest leading indicator, is the number of independent board searches. Through our executive recruiting partners, we've been hearing the uptick in that, and we feel it firsthand as well, and with many searches that are going on with our portfolio. A lot of companies are getting ready for this, and it's happening, and it's, you know, behind the scenes, but it will happen.
Oh, and boy, do we brace ourselves for it. CRV General Partner, Max Gazor, thank you so much for spending time with us, talking all things exits. Meanwhile, coming up, let's talk about Airbnb, revealing a new once-in-a-lifetime stay and experience category. Bring you all the details next. There's some good pictures. This is Bloomberg Technology.
The world's biggest record label, Universal Music, said it's entered a new licensing agreement with TikTok, ending a dispute that led to its artists' songs being pulled from the social media platform. Bloomberg's Alex Barinka here. Rihanna, Drake, joining Taylor Swift back on the TikToks. Give me the deets.
They are, since February, basically, the music from artists under UMG have disappeared from users' feeds and from the artists themselves because this deal was not in place. But basically, overnight, there is a new deal in place that would give improved payments for UMG songwriters and artists, give them access to TikTok Shop, the e-commerce capabilities. And the two companies also say that they will work together on promotional campaigns around new songs and records. And there's one more kind of piece to this whole story that was a big concern for UMG and a lot of kind of content creators, and that's to do with AI. This agreement does say that TikTok will expand its protections when it comes to AI, because certainly songwriters are worried about not only kind of fake songs being created, fake videos and images being created, but also the fact that it's been kind of a whack-a-mole process on TikTok to get those taken down. So exciting move for them, and I'm sure that a lot of the users who had the sound kind of disappear overnight from their songs and the trends they were doing will be excited to get those songs back too.
Less mutes. We thank you, Bloomberg's Alex Barinka. Brilliant to get all the assessment, but also going viral. Airbnb announcing its latest category, Icons, a new vertical for extraordinary experiences hosted by the greatest names in music, film, television, art, sports, and more. Joining us now with the details, Bloomberg's Natalie Lung. I mean, is this just a bit of good PR, or is this actually going to bring in real money for Airbnb?
Right. This is definitely part of their marketing expense. It's expensive to build the house from up, for example, from scratch, and placing it in New Mexico and hosting it up a crane 50 feet off the ground. So this is definitely a marketing expense for them, but they hope to be able to drive more traffic, new users. A user account is required to sign up, and also reach new audiences abroad.
This was a big thing that played out on social media. So they tried to do the thing from the movie Up, but it was with a crane. And then I saw all these like founders and people associated with Airbnb, pat Brian Chesky on the back. For him, this seems like a bit of a personal project, Natalie.
Right, it is definitely a personal project, something that he has done long before this launch. They put an IKEA home up on Airbnb, and of course last year there was the Barbie dream house which went viral. So this is really him taking Airbnb beyond some of the core experiences that we all come to know. He wants people to be inspired by these homes.
We'll see who starts wanting to get in on all of these one-of-a-kind experiences. Natalie Lung, thanks for bringing us a pretty fun story to end. as long as you're not afraid of heights or something. Meanwhile, that does it for this edition of Bloomberg Technology, Ed.
What a big show. And I imagine there will be another big show in 24 hours time because Apple reports after the bell. Recap all the conversations. So many stories, great Bloomberg reporting on the podcast. We're putting the pod on Apple, Spotify, iHeart and the Bloomberg platforms. And once again, just a big thank you from Caroline and I. So many of you reach out saying that you listen to the show in podcast form, and we'll keep bringing you that pod every day. Stay tuned. So much more to come, but one day left in the week. It's almost Friday, gang. From San Francisco and New York City, this is Bloomberg Technology.